Welcome back to the channel Stock Market Analyst. In today's video, we're breaking down the top 3 Canadian dividend ETFs to buy in 2026. If you're focused on passive income, portfolio stability, and long-term wealth building, this is a must-watch. Stick around until the end, because I'll share a bonus tip on how to maximize your dividend reinvestment strategy in Canadian tax-sheltered accounts, like the TFSA and FHSA 101. iShares on TSX Canadian Dividend Aristocrats Index ETF, CDZ. First up, the iShares S&P TSX Canadian Dividend Aristocrats Index ETF, ticker CDZ. This ETF tracks Canadian companies that have consistently increased their dividends for at least 5 consecutive years. Dividend yield, around 3-4% depending on market conditions. Expense ratio, 0.66%, slightly higher than broad market ETFs, but justified by its focus on dividend growth. Strengths. CDZ includes companies like Canadian Utilities, Fortis, and Scotiabank, firms with strong histories of dividend growth. Why 2026? With inflationary pressures and interest rate uncertainty, dividend growth companies provide both income and resilience. CDZ is perfect for investors who want long-term dividend growth and stability. Think of CDZ as your growth-oriented dividend ETF. It doesn't just pay dividends, it focuses on companies that increase them year after year. 2. Vanguard FHSA Canadian High Dividend Yield Index ETF, VDY. Second, we have the Vanguard FHSA Canadian High Dividend Yield Index ETF, ticker VDE. This ETF focuses on large-cap Canadian companies with above-average dividend yields. Dividend yield, around 4%. Expense ratio, just 0.22%, one of the lowest in Canada. Strengths. VDI is heavily weighted toward Canadian banks and energy companies, including Royal Bank of Canada, TD Bank, and Enbridge. Why 2026? With Canada's financial sector expected to remain strong and energy companies benefiting from global demand, VDI offers high yield at low cost. VDI is essentially the income powerhouse ETF. Low fees, high yield, and exposure to Canada's most reliable dividend payers. iShares Canadian Select Dividend Index ETF, XDV finally. Let's talk about the iShares Canadian Select Dividend Index ETF, ticker XDV. This ETF holds 30 of the highest yielding Canadian companies, screened for sustainability and payout consistency. Dividend yield, around 4-5%. Expense ratio, 0.55%. Strengths. XDV includes top Canadian dividend payers like BCE, Bank of Montreal, and Canadian Imperial Bank of Commerce. Why 2026? With telecoms and banks continuing to dominate Canada's dividend landscape, XDV provides high yield with sector diversification. XDV is the high-yield specialist ETF, perfect for investors who want maximum income from their Canadian portfolio. To recap, DOND, CDZ. Dividend growth focus, yield around 3-4%. VDY. Low cost, high yield, yield around 4%. 3. XDV. High yield specialist, yield around 4-5%. Together, these 3 funds balance income, growth, and diversification, making them the top Canadian dividend ETFs to buy in 2026. Here's a quick bonus tip. If you're investing in Canadian dividend ETFs, consider using a TFSA or FHSA. These accounts allow you to grow your dividends tax-free, which is especially powerful when reinvesting. If you enjoyed this breakdown of the best Canadian dividend ETFs for 2026, make sure to subscribe for more ETF reviews, dividend investing strategies, and passive income tips. Drop a comment below. Which Canadian dividend ETF are you buying for 2026? CDZ, VDY, or XDV? I'd love to hear your strategy. And remember, dividends aren't just income. They're a long-term wealth building tool.